If you hold XRP, the wait is finally over. With the XRP AMM, the automated market maker, coming out, a lot of people are saying that it's going to send the price of XRP to $10,000 or more. However, you are being lied to about what's about to happen next. As we go into Bitcoin's halving, which happens every 4 years, in this video, I'm going to be sharing with you exactly what's about to happen next on the charts for XRP and for Bitcoin that will create more millionaires than ever before. And we have to share some key details with you about XRP AMM that virtually nobody is talking about. And also one altcoin that is set to make some massive moves towards the tail end of this bull run that you need to keep on your radar. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you're going to become the first millionaire in your family tree, confirm it by tapping that subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So I was having a crazy dream last night, and you know how when you have a dream, like your iPhone is never in the dream? Well, this was one of the first dreams that I had where my iPhone was actually in the dream, and I was looking down at it, and the price of XRP was glitching on Coinbase, and it was going from where it's at right now, which is roughly like 60 cents, and then it started glitching upwards of like $50, $100, and when I woke up, I was like, I didn't know if that was my unconscious mind, doing that because I've been making so many freaking XRP videos, or if that's what's actually going to happen. But then I wake up and I see this from Lord XRP on Twitter saying XRP glitching from 20 cents to $9,800. And so these glitches have been happening consistently. Now, does that mean that XRP will actually go upwards of $9,000 or $10,000? Not necessarily. One can only hope, wish, and dream. But what we can do is look at the facts on the charts. We can discuss, some coming development, some coming utility that's coming for the project, and then what's most likely to happen next. Because if you guys want to see a realistic XRP price prediction for 2024, 2025 bull run, and if it's possible for XRP to hit $500, you're going to want to watch the video that I did 2 days ago. There's about 21,000 views on it. I give you guys my XRP, a realistic XRP price prediction in this video based on different scenarios of market cap and what's most likely to happen next. But check that out after this video. I want you to pay close attention to this because let's talk about facts on the charts on how we spot key pivotal points when we're at the end of the bull, the start of the bear, the end of the bear market, and the beginning of the bull, and how we identify that. Because as you guys can see, the markets move generally in 3 phases, right? There's multiple different phases and Elliott waves within each phase, but we're just going to break this down into 3 phases, color-coded in 3 colors: green, red, and yellow. All right. So if we go all the way back to 2017 during that bull run, that's when XRP broke out from like 0.005 and then went upwards of, $3+. And that was very clear. That was a bull market. Now, how do we identify a bull market? Well, pretty simple if you're looking at the price action, but if we get more intricate and we look at the MACD, one of the key indicators, the thing that we want to see is we want to see the MACD line in blue above the 0 line and also above the signal line in orange. And the further extended that we get above the 0 line, the histogram is going to show green, these massive green bars. Now, how do we know when the bull market is coming close to an end? Well, it's when the histogram starts to top out and the MACD line is well above the signal line, because as you guys can see, when we see a bearish cross, meaning the MACD line in blue crosses below the signal line in orange, that's not necessarily the top, that's in the middle of the bear market. Because as you guys can see right here, XRP's price dropped from $3 down to 42 cents, and then we saw the bearish cross. So you don't necessarily want to wait for a bearish cross where the MACD line in blue crosses below the signal line in orange, and then also the histogram crosses from green to red below the 0 line before you hedge out of your positions. There's some key things that I'm going to share with you towards the tail end of this video that will give you guys a good understanding of when the proper time to hedge out is based on Bitcoin as well too. So we're going to see if looking at the MACD and comparing this to Bitcoin will give us good indicators on what stage of the bull run we're in. Because a bear market, once we see a bearish cross where the MACD line crosses below the signal line, it's very clear that we're in a bear market. We're around the middle of the bear market. Back in 2018, the price was dropping. XRP saw a bounce at like 22 right after the cross took place, and then the histogram turned below 0. We were in the middle of the bear market. Now, one thing that was interesting is when the histogram, bottomed out down here, and you could see us go from dark red to like a light pink right here, where the volume was the most amount of, oversold, we continuously trended to the downside to find an even lower low. However, when we look at Bitcoin, when we see this bearish cross take place, we're in the middle of the bear market. Bitcoin continuously trended down, but that's where Bitcoin's bottom was the end of the bear. So the 1st of January 2019, right around here, right after December. So from December to January, the bottom was in for Bitcoin, but in December and January for XRP was at 28 cents. XRP's real bottom was at 10 cents during COVID. So XRP actually bled out a little bit more, when COVID hit. And then Bitcoin, saw a higher low than it did from December of 2018 to January of 2019, a higher low of like $3,900. Down here was like, looked like right around $3,000, a little bit lower than that. Whereas XRP went even lower. So when we go from a bear market from top to bottom, close to the bottom, we hit what's called the accumulation phase right here. Now, the accumulation phase is where we're finding a bottom. As you guys can see for Bitcoin as well too, the last bull run, some people could argue and say that the accumulation phase was from like November of 2018 until May of 2019. Now, what was interesting about this is the accumulation phase and start of the bull were kind of commingled together because the accumulation phase was really, really quick. When Bitcoin broke out from May of 2019, rallied up, we saw a shorter accumulation, but then we saw the black swan event. So arguably, this whole accumulation phase could have been from like December 2018, January of 2019, until we finally broke out in November of 2020, where then Bitcoin clearly entered into a bull market past the all-time high on the monthly. So part of this bull run arguably started back in June of 2019 because we saw a bullish cross right here where the MACD line crossed above the signal line in orange, but then we dipped back down below it for the black swan event. So that was a very, very rare bull run, whereas this bull run, as you guys can see on the MACD, on the 1st of April 2021, we topped out on the histogram while also the price was topping out at $65,000 for the first peak. The second peak was really a dead cat bounce because the histogram was lower, forming a lower high, whereas the price chart was forming a higher high, which was a bearish divergence. We then saw a bearish cross where the MACD line in blue crossed below the signal line in orange on the 1st of January 2022. The price was already in a decline. We were in the middle of a bear market. And then the histogram bottomed out here on the 1st of September of 2022 when Bitcoin's price was around $18,000. It took a couple months after that before Bitcoin finally found a bottom, but it's very, very clear that the accumulation phase was down within this range until we broke out in October of 2023. We also saw a bullish cross right here around July of 2023 where the MACD line crossed above the signal line in orange. And right now, currently the MACD line in blue is above the signal line in orange. We're trending above the zero line and the histogram is seeing positive momentum to the upside. So it's very, very clear, it's not up for debate that we're in the green bullish stage of the bull run right now. But how does this relate to XRP? So if we go back here to August of 2019, roughly to November of 2020, XRP was finding a bottom. So we could argue that this was the accumulation phase as the MACD line was below the signal line, we were below the zero line, and the MACD line was getting closer and closer and closer to the signal line. Then we saw a bullish cross where the MACD line in blue crossed above the signal line in orange on the 1st of September of 2020, which signaled that we are going into the start of the bull run. It's non-debatable because the price from that point after that, shortly after, just a couple months, rocketed up to 74 cents, by November of 2020. And then of course the lawsuit hit. XRP's price was suppressed. We saw it drop back down. So this was a quick blip on the monthly radar where this candle went from like 60 something cents all the way down to 18 cents in a matter of a month. But it was very, very clear that we were in the bull run stage of the bull run after the accumulation phase because the MACD line in blue was above the signal line in orange and we were trending above the zero line. But the end of the bull was when the histogram topped out in terms of momentum, but yet the MACD line stayed above the signal line until the 1st of January of 2022 during the middle of the bear market. So during the last bull run, the histogram was at about 0.10 on the monthly chart. During the bull run before then in 2018, the histogram was at 0.14. So we could argue that anything between 0.10 and 0.15 for the histogram could be the top of the market, regardless of wherever the price action is, because we don't just want to watch price action on the chart, we want to watch key indicators, and the MACD is one of those indicators. And then we want to look for confluence across multiple indicators like the RSI, the stochastic RSI, and then other charts comparing to Bitcoin as well too, to see where we are in the macro market cycle to understand when XRP's top could possibly be in. But if we look on the 1st of January of 2022, we can see that the bear market was clearly in. We saw a bearish cross where the MACD line crossed below the signal line. The price was in a downswing. And then we saw the end of the bear market right here by the 1st of August of 2022. The histogram had bottomed out. We started reversing, and sure enough, the MACD line started turning back around. We saw a bullish cross right here on the 1st of June of 2023, which signaled, just like it did the last bull run for XRP and for Bitcoin, that the start of the bull run is here. The MACD line is above the signal line in orange. We're trending above the zero line, just barely, but the price has yet to see a massive breakout like it did the past 2 bull runs. So in my opinion, which I could be wrong here, but XRP is getting ready to have a massive breakout over the next few months. Whereas Bitcoin's already had its breakout and the MACD line is well above the signal line, we're well above the zero line, and the histogram is all the way up here at about 4,130, very close to where we topped out during the last bull run and way above where we topped out in the bull run of 2017. So does that mean that the top for Bitcoin is in? Absolutely not, because when we look at the RSI, we're sitting at 75. Technically, we're in overbought conditions, but when we look at the peak of the last bull run, we were at 92. The last bull run before then, we were above 95. The bull run before then, we are upwards of 96. Bitcoin's halving is coming up in less than a month, and we're only 486 days from the low of November of 2022. So in my opinion, this bull run isn't even close to being over for Bitcoin, and especially for XRP, because if we look at XRP on the monthly RSI, we're right in the middle at about 53. And the last bull run peak, we were upwards of 74, and the bull run before that, we were all the way up here at about 95. And just recently, Ripple hired a senior manager for business development for institutional DeFi over in New York, and the job description specifically mentions leveraging the XRP ledger. So according to Anders over on Twitter, he's supposing that the automated market maker will be a critical piece to their institutional DeFi solutions. And institutional DeFi will likely become a multi-trillion-dollar market. So XRP's market cap right now is only sitting at $34 billion, and that might seem like a lot of money, but Bitcoin's market cap is sitting at $1.3 trillion, and the whole entire industry is only at $2.5 trillion, just a fraction of the market cap of gold, let alone looking at the market cap of an artificial intelligence company like NVIDIA that went upwards of $2 trillion. That's just one company, and we're looking at an entire industry sitting at only what David Schwartz had to say at the Apex Summit back in 2023 about the XLS 30D automated market maker.
I am unreasonably excited about this for largely personal reasons. I've spent a lot of time studying things like trading strategies and Forex markets, and this is near and dear to my heart. I also learned something that I didn't know, which is as I watched automated market makers develop on other chains, I sort of thought that automated market makers were better than order books. That like we implemented order books on the XRP ledger because it's sort of like the obvious thing. And then there's this really cool thing called an automated market maker that most other like DeFi platforms are using, most other DEXs are using. And I learned as I looked into it that they're very complementary. They are not one or the other. One is not better than the other. They each have their own advantages and disadvantages. And the two of them together is way better than anything that you could get from having either one independently. And XLS30 is not just another AMM implementation. This was not the XRP ledger playing catch up. We were caught up with an order book. This is a true innovation. The XRP ledger is a trusted and leading enabler of DeFi because the underlying architecture of the ledger, combined with the protocol native design of the decentralized exchange and soon the AMM, will address most of the pain points faced in the decentralized liquidity landscape today. The XRPL's DEX was launched in 2012, the first DEX in the world, tokenization of any asset, the ability to trade and move these tokens anywhere in the world in just seconds, and open, globally competitive liquidity. Now, adding AMM to that, AMM, first and foremost, as I think about it, most people think of an AMM first and foremost as providing liquidity. I think of it first and foremost as a trading engine. RippleX is focused on differentiating the world's first DEX through automated market making. The AMM specification is now on DevNet for testing, and it'll be available to vote on mainnet, I think just in a couple of days. But ultimately, I see the AMM as a trading engine. It executes a trading strategy on behalf of those people who sort of provide the liquidity. So as most of you probably know, an AMM has a pile of two assets, and it makes markets between those two assets. But it's also implementing a yield. So if you were an Apple buyer and seller and the prices of apples were different around the world, you could go around the world buying and selling apples and make a profit. And what you would have is you'd have a pile of apples and a pile of currency, whatever currency you like, euros or dollars. And you would buy apples and your pile of apples would go up and your pile of currency would go down. And you would do that when the price was low. And then you would sell apples, right, when the price of apples was comparatively higher. And if you do that, eventually your pile of money will get bigger. And that is essentially what the AMM tries to do. It implements a trading strategy to harvest volatility on behalf of the liquidity providers who loan it assets. I'm much more personally excited about that than I am about the fact that it provides liquidity, but it does also provide liquidity. It does also make markets. Yeah, exactly. But we normally think of arbitrage as arbitrage over space, right? Like you go to this market and you buy, and you go to that market and you sell, and you go to this market and you buy. This is arbitrage over time, but it turns out arbitrage works over time too. The only problem is you don't know the price ahead of time, right? You can't predict, but it turns out you don't need to. So an exciting development also is Orchestra Finance, independent of Ripple, which is going to be the first interface layer for the AMM. So it provides benefits for all of the different stakeholders, the liquidity providers, the people who sort of take their assets and give them to the DEX, arbitrageurs, traders, and developers. Developers, of course, benefit from the liquidity that the automated market makers provide. Their tokens are more liquid, and so users can benefit from access to that liquidity. Liquidity providers want to maximize the returns that they get from the various different things that the automated market maker does to make a profit. XLS30 enables them to vote for trading fees. And probably the biggest single innovation is the continuous auction mechanism that reduces impermanent loss, and it also increases the efficiency of the volatility harvesting. What this does is this takes some of the profit that would normally be made by the arbitrageurs and gives it to the liquidity providers. The arbitrageurs are trying to make profit from sort of asymmetric information. They have access to the prices off the ledger, and the AMM does not. The auction mechanism increases the probability of success to capture mispricing profits, and it enables the automated market maker's trading strategy to capture very small changes in price. If you think about it, big movements in price have a larger opportunity for profit simply because the price change is bigger. Like if you're buying and selling a stock and it moves a lot, you can make more money. But it doesn't do that very often. Small movements occur much more often. And in aggregate, if you sum them all up, it's a greater opportunity than the large movements. But in order to catch the small movements, the system has to be very efficient. If there's a high fee, a small change in price won't be captured because people wait until the price difference exceeds the fee. If the transactions are slow and there's a small movement, you don't try to capitalize on that because the price might move against you before your trade can execute. The XRP ledger's features make it easy to capture those smaller price movements. And of course, integration.
Now, for those of you guys that are wondering, what is this? How does this work? How will you benefit from this? I thought this was a great video explaining the automated market maker very simply from Will Fix right here. Check this out.
So here's how it works. You deposit two different assets. Now, I believe with XRPs, you deposit one, it splits it for you. You just choose which ones they are. But you deposit two different assets, XRP and USD, in a specific ratio to an AMM pool. The AMM automatically adjusts the price of each asset within the pool based on supply and demand. If the price of one asset significantly changes relative to the other compared to when you deposited them, you experience impermanent loss. Think of it like this. Imagine depositing one XRP and 100 USD at 1 to 100 ratio. If the price of XRP doubles while USD stays the same, you'd get back approximately 2 XRP and 50 USD, assuming no trading fees. While you have more XRP, its value doesn't fully compensate for the lost USD value, resulting in impermanent loss. Key factors affecting impermanent loss. Price volatility. The greater the price difference between the deposited assets, the higher the potential for impermanent loss. Pool stability. Pools with assets known for stable prices experience less impermanent loss. Holding period. The longer you hold your assets in the pool, the less likely impermanent loss becomes permanent, as prices may fluctuate and return closer to their original levels. Remember, impermanent loss is just one risk associated with liquidity pools. You can manage it by choosing the pools with assets known for less volatility, providing liquidity for longer periods to give prices time to adjust, understanding the fees and potential rewards before participating. While the XRP AMM doesn't currently offer built-in impermanent loss protection, being informed about the concept and its influencing factors can help you make informed decisions about participation. If you're holding XRP in a wallet, then you're experiencing impermanent loss during price fluctuations. Michael Latini, 9294, poses this question. Great video. I have a question for you. So if we as XRP holders turn over XRP to a liquidity pool, then why would the price go up if we just give them back the supply goes back up? Why not everyone hold their XRP until they become so desperate and need it so badly that the price has to go way up, right or wrong? I'd appreciate if somebody could make this make sense to me. Here's a quick answer I found to this question, and it makes a lot of sense once we stop and think about it. For all those people who don't know, AMMs will lock up XRP in liquidity pools, meaning there will be less XRP available. So as demand grows, then supply and demand economics should drive the price up. When you stop and think about it, you can see how this is true. This takes it off of the market that's where they're selling, like exchanges, and has it locked up in these liquidity pools. So it's not available. Those are parked somewhere with a job to do. The TLDR is, this really is what the new financial system's all about. It will drive capital efficiencies into the markets, the likes of which nobody's ever seen before. As XRP holders, you will be able to switch to the best yielding liquidity pools and end users, whoever they may be. It could be institutions, it could be banks, it could be insurance companies. There'll be all kinds of, what they're saying here is, you name it, there'll be all kinds of liquidity pools available where you'll see the different amounts of yield that they're making based on their activity. You'll eventually get the best deals out of AMMs. This really is the future of global finance. One of the additions to the XRP AMM is they have added in the idea of order books. Now, if you don't know what an order book is, it just gives you insight on what the bid and ask is, and then it has, usually it also shows, the bid and ask, both ends of it, and it'll show how many people are bidding or trying to sell or trying to buy. Here's what it looks like. So this is what you see as an order book. And as you can see, you have a column there that shows what the price is, in the red. You got what your selling prices and bids are, what your bid and ask is. And then the other column that you see there is the amount of the coin at that price that's being offered. So you can see the value of that. Now, the value of that as a manual operation is one thing, but they're talking about creating these AMMs, which is smart contracts. This is something that's going to read those behaviors and be able to make buy and sell decisions based on those, being able to anticipate a huge number of sales, which generally can drive the price down, or a huge number of purchases. And this being computer automated and made into a smart contract is a super great advantage. So it's not just an order book, it's that it's going to be automated order book for our benefit. Now it's going to do the same thing between exchanges for arbitrage differences. Do you know what an arbitrage difference is? Check this out. So if you have a exchange scanner for arbitrage differences, you have to pay for those. Then this is what you see. Look on the left side. You got Bittrex, Kraken, Poloniex, all these different exchanges. Now look to your right, and you see that column with red and green. It says spread. This just shows where you can buy a coin on one site and sell it on another site and make the arbitrage difference. Well, guess what? The AMM will do this for us, so it will be making us money this way. By the way, I'm answering this question by Go Pair Traders 4156. He's asking if we could explain the AMM and also LL flow. Can you do a video, simple breakdown of AMM? So hopefully this helped you guys out.
Now, I think all that is very, very interesting. Let me know your guys' thoughts on that. In terms of impermanent loss, if XRP does shoot up in value, yes, it does make more sense just to hold your XRP. For that reason, I'm not messing around with the automated market maker right now, because even looking at this, Ripple's ex-dev just posted this saying, we've identified a discrepancy in a few AMM pools in which transactions are not executing as intended. Our engineering team is working to resolve the issue alongside community participants. Out of an abundance of caution, it's best not to deposit new funds into AMM pools. And so don't deposit any funds. Don't take advantage of this right now until they say it's safe. And even at that too, with impermanent loss, I've dealt with liquidity pool tokens in the past, and usually like when you hold the token, eventually, if you believe in that token to participate in the liquidity pool, eventually it's going to shoot up in value at some point. So you face impermanent loss because then it sells off your portion of that liquidity to balance it out. And it's more beneficial, in my opinion, if the price just stays steady. So in terms of XRP being a stable coin long term, I do see how this is going to benefit, massive banks, financial providers to have liquidity in these pools as the liquidity grows, and then liquidity providers to be able to earn passive income from that. So I do think long term this is going to be amazing, but right now they got to fix some stuff. So it's super, super goofy. So what we want to look for, guys, is while you hold your long-term positions in the projects you believe in, again, none of what I say is financial advice, throwing this disclaimer in there because I'm not your financial advisor. Go consult your financial advisor. I'm never going to tell you what to buy, what to sell, when to buy, when to sell it. What I do is provide you with the education, the information, and then what you choose to do is up to you. And I show you how to do your own research on this channel. So if you appreciate content like this, give this video a like, subscribe to the channel. And if we look at cryptobubbles.net, what we want to look for is what's trending and what's hot, and then where the narratives are shifting to. Now, no matter what, in my opinion, when a certain project starts to surge, for example, meme coins are surging, you could see artificial intelligence and gaming. Well, where those projects are going to be traded are on decentralized exchanges. And so in the last bull run, we saw exchanges like Uniswap. We saw this current bull run, we're seeing Jupiter surge, DYDX, Pancake Swap last bull run, Curve DAO, then we saw 1inch and Sushi Swap, and then Joe. So we're seeing a lot of these decentralized exchanges, get massive amounts of volume come through as traders come onto them, and then they get the exchange fees. Then they use those exchange fees to fuel their token, whether it's Uniswap, Pancake Swap, Sushi Swap, or whatever. So what we want to spot is lower market cap projects that have a higher potential for upside that are just launching with strong utility. And for example, one project that I think is going to do very, very well this bull run is Dex Toro, their exchange and their DToro token. Right now it's sitting at 56 cents. The market cap of this project is only at $1.1 million, and it's on Optimism right now. And so when we go over here, we go to their Twitter, this decentralized exchange is just getting started. They crossed $10 million in monthly trading volume, and they're up from the previous month. Now, if we look at Optimism has a $3.7 billion market cap, and the team is even potentially talking about migrating over to Solana, guys. And Solana has an $81 billion market cap. So if they end up doing that, that could drive massive amounts of awareness to this project, because right now their Twitter, fairly small compared to other massive projects in the space at 4,000 followers. But when we go to solidityscan.com and we check out their audit and we look at the vulnerability classification and severity organized in descending order of severity for easy reference, like critical, high, medium, and low. If we scroll down here, you can see the language is solidity and the security score is 90.83 out of 100, so that's great. So when they improve this score could increase and get closer to 100. Now, earlier this month, they just listed 4 new perpetual markets, and Dextro runs an audited smart contract on Ethereum, which eliminates the need to trust a centralized exchange while trading, so they combine the security and transparency of a decentralized exchange with the speed and usability of a centralized exchange, and they offer 50x leverage for a limitless range of assets powered by the Ethereum blockchain, offering exposure to real-world and on-chain synthetic assets, which include crypto, forex, stocks, and commodities, trading perpetual futures with low fees, deep liquidity, and zero slippage. So the 4 perpetual markets they're listing is CVX, Jupiter, Pendle, and STRK. And when we look at the total trading volume on their platform month on month, we can see November is all the way down here, December increased, January increased, then February, and now March. So we see an uptick in volume, which is very healthy. The largest assets are obviously Bitcoin, Ethereum, then Solana, then Optimism, then Sui, Injective, Bonk, XAU link.atom, and then down from there. So what I'll do is I'll leave a link below this video that you guys could benefit from for Dex Toro. And when you click that, it'll take you to a page that looks like this. All you have to do is click get started. You'll see the referral code says Bull Runners. And yes, that is our referral link. We do earn a small percentage of trading fees, and that's to help support value-based videos like this if you appreciate this type of content. So all you need to do is click submit, connect your wallet, and click confirm. Now, if you don't have any Ethereum on Optimism in your account, it'll say you don't have enough Ethereum to pay for transaction fees on the Optimism network. So all you need to do is go down the description below this video and click the link to the tutorial showing you how to bridge to Optimism, which you're going to need to know anyways if you want to trade altcoins on the Optimism network. And then it's very, very simple to bridge Ethereum to the Optimism blockchain. And then when you guys connect your wallet, I think the gas fee is like $1 or $2, but that'll give you the ability to trade on this platform with fees as low as 0.015% with up to 50x leverage on a variety of different assets, and you can earn Detour rewards on every single trade. Plus, they have a referral program as well too, so if you guys know any traders, you want to share this on social media, you could benefit from it as well. So check that out. I know you guys are going to love it. And if you want to get exclusive early access to the Underground Guidebook for discovering 100x altcoins where you don't need any previous crypto trading experience, you can get access to that first when that's released, along with our crypto education platform, by simply going to bullrunners.com, clicking the button on the page, put in your best email address. You'll be instantly subscribed to our daily video newsletter where we give you the best information to help you prepare for the worst that's yet to come in this economy, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact just based on inflation, and you're preparing yourself by getting into blockchain tech, because blockchain tech, distributed ledger technology, and cryptocurrencies are going up in value. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. So I'll see you guys on the next video. I will see you on bullrunners.com right now. As always, you know what to do. Stay bullish.